All right, you may have seen The Big Short, so you think you have an insight into just what happened with that housing situation? Well, if you're not quite sure, let's try to bring you up to speed right now when we look at private mortgage sales. So I'm going to go to my first slide here, neighborhoods with mortgage sales. Now, these are showing the disparate impact of HUD, that's the Housing and Urban Development Note Sale Program on African American communities in New York City. You can see clusters here in Brooklyn, there's a few up in the Bronx, but Canarsie, there's some places in Bed-Stuy and central Brooklyn that really have a high concentration of these things. So this is just giving you an overview of where some of those sales are and how it really affects Brooklyn. The percent of population that happen to be African American greater than 50% in the areas that are a little bit deeper purple. Going to move on to the next slide here, the sale of federal mortgages to investors. Now, these are distress sales, meaning, as we alluded to in the opening, when you miss one payment, two payment, you fall 3 or 4 behind, your mortgage goes from that federally backed, and they bundle it and sell it in large quantities to people who are investors. So your home, maybe your neighbors, the people down the block, if you fall behind on those payments, they bundle them and these investors buy them. These distress sales, if we can look at it by the numbers. In 2012, the third quarter, there were about 5,291 such sales that were made. I'm going to fast forward to 2014 in the second quarter, and you see that big bar there? That represents more than 31,000 mortgages that were bundled and sold to mortgage investors. Now, that is 6 times as many as the previous 2 years, and I'm going to fast forward again another 2 years to 2016, where in the first quarter we saw some 7,644 such sales of those bundled mortgages that were sold to private investors, all to make some cash there. So what is behind these sales and how are they affecting communities in Brooklyn? We're going to get into that in the A block.
Okay, so if words like mortgages, federally insured, and foreclosures have you feeling a little wary, we're joined by 2 experts who will help take this complex issue and bring it down to its essence, the impact on ordinary people and their homes. Elizabeth Lynch is Supervising Attorney at MFY Legal Services. Welcome to BK Live.
Thank you.
And David Quart is the Deputy Commissioner of Strategy, Research, and Communications at the New York City Department of Housing Preservation and Development. Thank you so much for joining us, David.
Thanks for having me. I appreciate it.
Excellent. Why don't we start with you, David? Tell us what exactly is happening here.
Well, I mean, there certainly is a lot of effects of the mortgage crisis, of course, from 2008, and it was a terrible time, and it is extended over a long period of time. And so one of the things that has happened is that HUD and FHA have pooled some of these loans of distressed assets and sold them. But one of the things where HPD, the Department of Housing and Preservation and Development, where we are working that we have done is to work with FHA and where they have created pools of these loans for the municipalities as well as our not-for-profit partners to purchase some of the loans, and as a way that we can pull it into what we call our portfolio of projects to ensure that, number one, we are stabilizing neighborhoods, number two, keeping people in their homes wherever possible, or if keeping them in their home or having a mortgage doesn't make as much sense, then making sure that they can stay in their home potentially as a renter and ensuring that that affordable housing is preserved and in good quality. So it's an opportunity. So there's a lot going on, and I'm sure Elizabeth can talk more about that, but there's a lot going on. But our role most recently is this opportunity, which is unique, and I think the first time it's ever been done, where a local municipality with not-for-profit partners has purchased a set of these loans in some of these troubled neighborhoods that you just spoke to earlier, Brian. Right. And getting them, back on their feet.
So previously, this was sort of the exclusive providence of the millionaire and billionaire investment groups who could afford to buy these bundles that were just too huge for someone like the Fifth Avenue Committee or Bridge Street Development to get a piece of the action in their own neighborhood. So instead of neighbors being able to invest in keeping families in their homes, they couldn't afford to buy $100 million worth of mortgages when they really wanted to save the 20 buildings down the street. But now special allowances are being made so they can do that.
That's right. There have been, there is the program that that we're working out is called the Distressed Asset Sale Program, which specifically requires neighborhood stabilization outcomes. And so if you're buying these loans, you must ensure that you're going to meet neighborhood stabilization. And as I said before, that means keeping people in their homes, modifying the loans. Of course, it is our interest and part of our mission in HPD that we keep everyone in their home and preserve as much affordable housing as we can.
So you have to have an intention. It's not just about making a quick buck. You have to want to preserve the neighborhood
Absolutely.
to get in on the sale. So I'm sorry, I was just thinking about that whole thing that I was talking about with The Big Short. Like Margot Robbie in the bathtub helps to make me understand a little bit more about what's going on. But you're working with people every day and you have to translate these things. What's the point of entry for regular folks to understand what's happening here?
So I think what HPD and what David's doing is really important in stabilizing the neighborhoods and purchasing some of these mortgages that HUD is bundling and selling off. But we still have to remember it is a very small portion of these sales. So from 2012, so HUD initiated this program, the Distressed Asset Stabilization Program, to sell mortgages out of the FHA, the Federally Housing Administration Insured Mortgage Program, which has these great protections for homeowners. They understand that the homeowners that get FHA mortgages, they're first-time homeowners. They need a little bit more help than somebody who's maybe grew up with homeownership. They have more protections, and these homeowners actually pay for that. They pay for it with higher closing costs at the closing point to HUD, and they pay a monthly insurance premium to HUD to be part of this program. But all of a sudden, as soon as a lot of these homeowners fall behind, HUD is now bundling these mortgages and selling them. And some are being sold to nonprofits and local governments, and that's great. But that's only so far. I don't know about the most recent sale, but so far that's only been 5% of the mortgages. The rest are being sold to hedge funds and private equity. And these hedge funds and private equity buy these mortgages for 40 to 60% of the value. So because HUD
they still want their money. They bought it at 40 to 60 or what it's worth, but they still are coming after you. And they're not passing on those savings, They're looking to collect the whole amount. So they might only pay 40% of the balance of the loan. On the risk that they may never get paid. Exactly. And so once it's sold out of the FHA program to these hedge funds, it's complete. All those benefits those homeowners have been paying for are completely lost. And now these homeowners are left to whatever these hedge funds want to offer. And right now what we're seeing, what a lot of homeowners came to us with, were these modifications that they would receive, modifications we consider predatory. And in fact, some of the modification documents have to, under New York law, state that they are a subprime product. Because we're going back to that because it's in the hands of hedge funds and private equity. That's one of those words you hear, subprime. What does that mean, subprime? Because it's like the bud, but I don't think a lot of us have a sense, like subprime. Is that bad? Like, what is subprime? Subprime usually means, so it's usually, most mortgages, a traditional mortgage, a prime mortgage, you look at the homeowner's income, whether or not they can afford it. You also look at the terms. It's usually you pay down principal and interest over the life of the 30-year mortgage, right? So it's a responsible lending product. Subprime will have certain aspects that might be good for people who are really sophisticated and wealthy, but for the average person is unsustainable. So what we're seeing in these modifications is what's known as an interest-only modification. So these homeowners, they think they're paying down their debt, but they're not. They're just paying interest directly to the hedge fund, and they're not paying down any principal. And then when that 5-year period is over, we're estimating pops and payments of $600 to $1,500. This is the balloon. This is, and these are just regular first-time homeowners. They're not CEOs at Goldman Sachs. They're not going to have like a huge increase in salary that they can afford it. And HUD knows that because these are the homeowners, that's why they have all the protections. So, and unfortunately, when we mapped it, the map that you showed earlier, you're seeing this disproportionately impacting African American homeowners. So while African American homeowners in New York City they make up 35% of original FHA mortgages, they're over 61% of these note sales.
So what you're going to see in 5 years is the Big Short Part 2. You're going to see waves of foreclosures in Southeast Queens, in Canarsie, in East New York. That's where we're really seeing these bedrocks of home ownership in the African American communities here in New York City is going to be, is at risk of being lost.
So David, you started with this program. Is there anything else on the horizon? It sounds like it's, you know, it's great for the few that it's helping right now, but it's not really enough. Is it sustainable in the long term? And are there any other plans to supplement who's not being helped?
Yes, no, I mean, as Elizabeth said, it's a small number, and the pool that we were successfully able to purchase a few months ago is a small number, but it also is a brand new model for all of us. But there are more pools coming down the pipe. We actually just yesterday put in a bid for a significantly larger pool. That's all I can really say about it right now, with the same model in place, us with partners, you know. But of course, you know, even though, you know, of course, our intentions and our obligations are about stabilizing the homeowners and stabilizing neighborhoods. I mean, to be realistic, it is very expensive, right? And so we can't, you know, we have limited public resources. I mean, we at HPD have dozens and dozens of programs to help homeowners and renters across the entire city, of course. But with this, you know, it took us with partners at the city council. We actually were benefited from some settlement money from Morgan Stanley and Citi, as well as the Goldman Sachs Urban Investment Group, who jumped in to help us with a loan in order for us to make this feasible, for us to do it, just for that first small pool of 24 loans, which is 41 residential units of housing, just to give you a sense of the pool that we purchased. But it's not just purchasing it, it's purchasing it, carrying it, working with each individual homeowner, figuring out what modification actually makes sense, so that we're not modifying it in the ways that Elizabeth was talking about. And it, you know, so it's years long. So it's expensive, and sources of funding is always the challenge. But that said, as I said, we put in a bid just yesterday for a larger pool, and we're hoping that we can be successful on that one.
When you say large, what neighborhood are we in? Like larger than the previous one?
Oh, significantly larger than the previous one.
Larger than
That's all I can say right
twice
now.
as much.
Excellent. So Elizabeth, it sounds like it's a long road ahead. It's an expensive road. Is there something that homeowners can do right now to avoid having their loans modified in this way?
I'm 3 payments behind on my mortgage. How do I not fall into the
this
trap?
category?
Unfortunately, for the HUD program where they sell mortgages out, homeowners are given no warning. I mean, they can reach out if they have an FHA mortgage and they're behind on payments. They should be reaching out to local housing counseling agencies and legal services. I mean, MFY is one. We brought a class action on behalf of African Americans. Homeowners in New York City to try to stop HUD's note sale without providing any notice, and because it is discriminatory. But all legal services organizations in New York City are aware of it. They should reach out to their local housing counseling agency, to their legal services agencies in their neighborhoods, or call 311 to be in contact with any legal services organization, and come talk to us. We can't stop it, unfortunately, because HUD does what it wants, and it provides no notice or even allowing the homeowner to say, hey, I'm trying to save my home. They might be actively working with their current mortgage servicer.
But there are just a number
And
of
then,
the
like,
system.
I mean, one of the guys we had, he had a modification. He had gotten an offer, then they sold it. So even if they think they're working with their mortgage servicer, they should call 311 and let them know they're in foreclosure and they need legal help, and they'll put them in touch with their local legal services
Before you're
organization.
really drowning.
Right.
Yeah.
You're bobbing above the water, call 311.
Right,
It's
and if
not
they're
a big deal.
interested in being part of the class action, I mean, they can contact MFY Legal Services if they're interested in more information about that.
Elizabeth, what is happening with the lawsuit, and what are the desired outcomes?
So we just, MFY and our partner law firm, Emery, Shelley, Brinkerhoff, and Abdi, filed last month, so it's in the beginning stages. We brought it against HUD as well as one of the private equity firms, U.S. Bank, as trustee for LSF9, and its mortgage servicer, Caliber. So it's in the beginning stages. The homeowners are looking to basically stop HUD from having this disparate impact on African American homeowners, and to provide notice before any homes are sold. So that way the homeowner can tell HUD that they're actively trying to save their home.
Yeah, even the city, we have those sales, and they have to have the public notice. It's in the back of the classifieds, whether it's like the municipal thing if you don't pay your water bill. So if we as a city can do that, certainly the federal government can say, hey,
Yeah.
we're
Guess
about
what?
to bundle it up.
And they have all these people's addresses, and like, they
Right,
can just
right.
write a
And know
letter.
where you live.
Right.
Woof. So I think we just scratched the surface here. I'm going to get a commitment from you guys to come back again soon, please, because
Please.
just to get the terms right. No, we needed the vocabulary before we can really get into it.
Absolutely.
Thanks for coming. We
Thank you for
appreciate
having
it.
us.
Thank
I'd
you
love
for
to
having
come
us.
For
back.
joining us.